And what's going on, everybody? It's Matt Faircloth. So welcome to today's live session with me. As you guys may know, I go live every Monday at noon Eastern Standard Time. Set your watch, set your lunch up, have lunch with me, noon Eastern Standard Time here on Bigger Pockets Facebook page and the YouTube page. So here's the thing. I need a favor. For those of you guys that are watching right now, take a minute, and I got a few asks. I got a couple of asks. Give this page a like. If you like this video, if you like Bigger Pockets, if you like what I'm doing, if you like anything like this, give it a thumbs up. If you love Dave Van Horn like I do, he's the man. Give him a thumbs up right now. So give this video a thumbs up, because it lets the social media channels know that you like that. I had like that Facebook or YouTube, and that makes Facebook and YouTube show it to more people. That's what we want. We need more people to watch this, more people to be aware of the awesome education that Bigger Pockets offers people, and how we can help each other get through this crazy Corona time that I talk about. Hello, Alford. So give this thing a thumbs up right now. Leave your comments. If you guys can, give a shout out on where you're from, because if you guys tell me where you're from, I'll try and give you guys some shout outs to people from your geography. So let me know where you physically are, and I'll try and give you a shout out too. Today's conversation, as you guys know, last week I interviewed Jay Scott. I'm interviewing my man Dave Van Horn today, and we're talking about obviously Corona crazy and how the world is changing, but also how we can diversify our portfolios, about maybe not just going through rentals all the time, not just a different alternative way to invest in real estate. And so my guest on today's Facebook feed is the Dave Van Horn, the author of this awesome book, Real Estate Note Investing, available on biggerpockets.com. Go on to biggerpockets.com/store, and you can pick up a copy of this book. And you can pick up a copy of this book on the Bigger Pockets store in the audio version or in the digital version for $10. People pay more than that for coffee every week. Now, you might not pay for that right now during Corona crazy, but $10 is very affordable for the awesome, mind-blowing education that's available in this book. So for $10, you can get the audio copy, the digital copy of this book by going to biggerpockets.com/store. So while we're doing this, open up another window right now and pick up a copy of Dave Van Horn's book, because this is a deal Bigger Pockets is not going to keep around forever. So go out there and pick up a copy of that right now while we're talking. Now, a few shout outs. I got Amber in Turlock, California. I got Alfred in Katy, Texas. I've got Giovanni in Orlando, Florida. What is the weather like there in Orlando? And I got Todd in Seattle. Welcome, guys. Dave Van Horn, welcome. Thank you. Where are you located and how are you? Let's start with that.
I'm in Philadelphia, and it's a little cloudy today. Starting to get a little warmer, spring-like. Looking forward to that. Trying to get outside more,
Yeah, it is good to get outside every day, even with Corona crazy. I've got 2 young kids, and I try and get outside just to get some fresh air. Even if I'm stuck in the house, it doesn't mean that I can't go out of the house a little bit, even, So
tan lines around our face.
It's good, right? Yeah, it gets a. I get a tan from the dome light that I use for for Facebooking and stuff like that. It actually is a nice. I think it's got some UV in there. I think, 'cause I'm getting more of a tan these days. So Dave, the world has changed, my friend. Give us a quick summary on the primary business initiative that you're in of note investing, and how note investing you see changing now and how you see it changing in the future. And then we can pop into some Q&A. So if you guys are watching, listen to what Dave's got to say, but start typing in your questions, because we want to have this a value service to you guys. So start asking your questions. This is just me and Dave doing some give back to help you guys out. So pop in your questions about note investing, and we'll definitely jump on them. But Dave, tell us about note investing in general and how it's changed over the last couple months.
Well, for us, we're in the distressed note space. So we buy distressed mortgages nationwide, 1 to 4 family residential. I manage several mortgage investment funds at PPR Note Company, right? And that's my main business. So for us, the biggest driver economically to our business is unemployment. And obviously unemployment's way up. It's probably unprecedented levels. And normally with high rates of unemployment, you have more distressed assets available. So in my business, we'll be entering our buying season, which the last buying season was after the last crash, which was, 07, 08, 09. And there's a time lag. There's a couple-year time lag. So a lot of the distressed assets that we buy have been delinquent a little while, So that just means our buying season will be approaching. And I mean, there's some opportunities now as well, but so it's a little different than some of the other folks who's might have just come out of an up real estate market or things like that. We've already heard predictions that some of the real estate values could fall. With this unemployment, you'll see situations where, a few months from now, where there'll be fewer people able to get a mortgage to potentially buy some of our properties too, right? So you have, in order to get a mortgage, you need a verification of rent, or you need a verification of mortgage, or you need a verification of employment as part of your mortgage application process, right? So some of the folks today that are laid off may have difficulty getting a mortgage in the near future, right? If they get back to work. So they might have to show some job history before they can actually be able to buy a house,
Okay. So you said a few key points here, right? You said values fall. And a lot of people ask me that, like, hey, Matt, do you see an effect on real estate pricing? Now, I'm investing in larger commercial, like apartment buildings, but we do have some smaller investments too. Do you think, I agree with you that new home sale generation and new loans are going to be harder to get because of the income crisis that's happened. Do you believe that this coronavirus is going to affect current home prices, not new transactions, but just the general home value across the world is going to dip because of this? And if so, why?
Well, we haven't seen a dramatic impact, right? I have a closing today. I mean, we've had closings all week.
Congrats.
We have we take a lot of property to foreclosure sale. We sell a lot of property in the 90-day period post-sale. We have a lot of listings. We have a lot of properties for sale. And, the foreclosure process has stopped in about 18 states for us. So the other states we're still working in, virtually, of course. But so a lot of foreclosure sales are still going off. We have a lot of vacant assets, so they tend to still go through foreclosure process. And we have a lot of closings still happening, some virtual closings, things like that. But it will start to slow down at some point because of, the catch up of the virus traveling throughout the country and things like that. So, but we haven't seen a dramatic decrease in pricing. If not at all, I'd say it's 10%-ish, maybe 15 at most or less. So it hasn't been dramatic yet. Now, what Fannie Mae is predicting, it could be significant in the near future. The pricing of assets that we're seeing in bulk is being dialed back because of longer foreclosure timelines, longer cost of capital, right? Your cost of capital. We're seeing it's a little harder to get UNO. It's harder to pull a permit at the township levels, right? So it's slowing down the process. So it's slowing down our foreclosure timeline. I mean, it's extending our foreclosure timeline. It's extending our ejectment and eviction timelines. It's extending our construction renovation timelines. So obviously that impacts profitability. So we offer less on the products that we're buying today. What we buy today, though, we usually don't come to fruition for us for a good 8 to 18 months. So 12, 18 months, a lot of that. So if we buy product today, we're not exiting that product for roughly a year or so. And what we're exiting now, we purchased a while ago, right? So there's a lag there that we see. So we already own the product that we would draw revenue from this year, for example. So we are doing certain things to shift revenue. We're selling more notes, for example, because we know we're going to have a slowdown in REO property. We know we're going to have a slowdown in our foreclosures. We know we have about I guess we're about 15 to 20%-ish in reperforming assets. We know that some of them will not reperform. We might see a downplay in that. So far, it hasn't been dramatic. But there are some funds that have all reperforming loans in their portfolio that are seeing an impact as much as 30% have stopped. So it would be similar to the multifamily or I have rental properties as well. I haven't seen too big of an impact, but I have a lot of government housing. About half my portfolio is government. Whereas some folks could be seeing anywhere from a 15, 20 to 30% drop in rents, which is pretty significant as well,
So you're seeing a 30%. Are you seeing a 30% drop, or are you seeing statistics that nationwide there is a 30%?
We're lucky that most of our portfolio isn't reperforming. It's less than 25% of our portfolio. But there are mortgage funds out there where 100% of their portfolio is reperforming loans. They can see an impact of 20, 30% of non-payment,
Okay. I got a few questions here, but I want to give a few shout outs here. Melissa in New Jersey. Hello. How are you? Want to say hi to Gigi in New York. I want to say hi to, I got a few, Christina here in Southwest Florida, Ramon in Houston, and Murray in Jersey City. Welcome, guys. And a few other. Now, if you guys are watching, keep the questions coming. I got a few good questions in here that I want to let you guys jump on, but keep the questions coming in because Dave is a very, very smart individual. We want to pick his brain and use Dave's insights to help us move forward through this Corona crazy time. Cody wants to know, are you seeing difficulties in accessing county information, particularly obtaining an O&E at the acquisition phase?
Not, I mean, some stuff slowed down. I mean, I know document custodians and things like that. I know on the trading, my partner does our trading, he oversees acquisitions, and there could be a slowdown in, availability of being able to transact. There could be delays. Yes. So Cody,
what is O&E? What's forgive my ignorance, what's Cody? And also for everybody that might not know, what is O&E? What's he asking here? Occupancy
and encumbrance report. So it's really a quickie title is what it is, really. So.
Okay, so you want to know who is occupying the property?
Yeah, is there any impact in getting certain types of reports? And there is, because some of them are done offshore. So Cody's right. There are some delays in some of the due diligence that you would do on your notes. That's what he's alluding to, I believe.
Thank you, Cody. Great question. Keep the questions coming, guys. I got Alford. This is just a basic question, Dave, but I think it's very telling and very relevant to the Bigger Pockets audience. Simple. Can I make $5,000 a month with note investing?
Oh, yeah.
Right. So. Okay. All right. Yes. That's it.
I won't be able to pay my stuff this month.
Yeah. Give me a brief scenario. And obviously, if those of you guys just joined, Dave wrote a phenomenal book for Bigger Pockets called Real Estate Note Investing. Here it is. This is what it looked like, called The Little Green Book, Real Estate Note Investing, which you can get at biggerpockets.com/store. And you can get it there. There's a big basket of free goodies you get when you buy books from Bigger Pockets. Yeah, you can get them on Amazon. But just go to Bigger Pockets and get them because you get a bunch of freebies along and additional information along with that book. And you can get the digital or audio version of Dave's book for a whopping $10 only this month. So go right now while we're talking to biggerpockets.com/store. Now, Dave, give me a quick scenario on how Alford can make $5,000 a month with note investing. How would that work?
Well, there's probably like 4 or 5 scenarios, right? So one is he could buy a note, mark it up, and flip it. Right? You can buy a non-performing note, get it performing, and make money that way. So he can make it monthly. He can make it on flipping the note. He can make it on originating a note, charge points, right? Like a hard money note. So there's literally an infinite number of ways to make money in the note. It's just like real estate, right? So real estate, I can make money buying the property. I can make money renovating the property. I can make money refinancing or selling the property, marking it up, wholesaling the property. Well, people do the same thing with notes. Anything you do in the real estate business, you can do in the note business pretty much. So you can wholesale a note, you can borrow against a note, you can flip a note, you can, all the same things you do in regular real estate.
Good. So, Dave, I want to give a little more 101 here, right? Because for folks that have never heard of note investing, what's that?
His question's extremely general, right? So
no, I know. I love that though. And I think that it's just it's good to know that it's possible because $5,000 a month is pretty much job replacement income for most people, right? And so
I have a whole portfolio of reperforming loans outside of PPR that I just collect, everywhere from 150, 200 a month to 300, 400 a month. Some notes I have are 500 and 600, 700 a month.
Note. Right.
They're cash loan every month, just like coming in, just like a rent check would be coming in.
Yeah. And I think that's what's interesting is that, and this is what I've learned through getting to know you and getting to know your business, because I'm a buy and hold landlord. But I've learned to look at notes the same way that I would look at buying a single family home or buying an apartment building or whatever it is. I'm buying a vehicle that can produce cash flow if I operate it the right way. Notes the same thing. So let me real quick spot check because I want to make sure everybody understands a few things. When Dave, when you talk about a performing versus non-performing note, can you talk about what is that? What's a performing note versus a non-performing note?
A performing note is paying. A non-performing note isn't. But there's, a note usually isn't considered non-performing till it's delinquent like 90 days or something like that. There's different classifications.
Yeah, it just means performing just simply means somebody's making their monthly payments.
Right? So it's I personally don't invest in non-performing. It's like some folks do, right? They buy the non-performing notes. Now I have a company that does that, but I don't do that when I go home. Like when I go home, all I have is performing notes, right?
Passive invest, right? It's more passive. Now you've taught me the strategy that, and for bigger pockets, folks watching, it's like buying a fix and flip, right? You could buy a fix and flip, or you could buy an apartment building or a single family home with rents coming in. You buy a performing note. It's going to have checks coming back as soon as you buy it. The homeowner or the property owner are making their monthly payments, so you're going to make that cash flow up front. Or you can go and buy a property where they're not making their payments, God forbid, but you're probably going to get it for a really good price because let's say the loan is like $100,000. Dave, on a non-performing first position mortgage, I mean, is it reasonable to say I could buy that for 50 cents on the dollar or less, more?
Right now, but there are times when you can, yeah.
Okay, so I could buy it for a discount, and then me or someone on my team calls that homeowner up and says, "Hello, I'm your new lender. How can we get this performing again? How can I help you?" Think about that for a second. You're actually helping people out. You're helping them get their debt straight, get their cash flow straight, getting them writing that monthly check. And then if you bought it for $50,000, if you get it seasoned and getting them making a few monthly payments, you now have something that's worth what, 70, 80,000 maybe, or maybe even 100 if they're what the par value of the note is.
Dramatically once they get pay history. So it's like phantom appreciation type thing. Pay history makes it go up in value. I
mean, you got to have good phone skills. You got to be willing to jump on the horn and negotiate and talk out with that homeowner. They're probably going to be embarrassed. They're probably not going to want to talk to you, but you got to get your way in the door and have a good conversation with them. They're going to be embarrassed about the situation. They're not going to be, "Oh, hey, great, you're here to help me." They're not going to see you that way at first, but then they'll want to have, if you can show them that you want to help them get themselves back out of the hole and help them out, I think they'll see it that way. A lot of what we're talking about is covered in Dave's book, Real Estate Note Investing. So check that out. Tons of more questions, Dave. So put your seatbelt on. Here we go. I got Jesse here as the author. Oh, Daniel. Oh no, let's skip that one. I got so that you're just talking about. This is a great book to check out here. Arnold wanted to know, this is a specific deal that Arnold's in here. I have a question. I got offered on a house. Owner contract, $30K down, $100,000 a month, or $1,000 a month. 3 years interest free. Dave, they want to know if this is a good deal. What do you think about that? Can you read that? What do you think about that note?
Well, I mean, it's relative, right? I mean, it's really what
30K down, so that they're going to buy it. What's that?
It's really what kind of return does he want? I don't really do too much in the seller finance arena. I started out in that arena, but most of the time it was creative ways for me to sell my property, or a way to buy a house with owner financing, with very little capital out of pocket, that type of thing. I would make multiple offers on a property, and I would gear them to how, no matter which one offer they accepted, it was a win for me,
Yeah. Arnold, what I would say to this deal, Arnold, is that it really has to do with cash flow. If I'm reading this right, that's going to be $1,000 a month, but they're not going to make any payments for the free. It says 3 years interest free, or maybe it's just $1,000 that you pay per month goes all towards principal.
They want to knock $36,000 off the price after 3 years.
Yeah, right. It's interest only.
With that, if I'm the buyer, I am.
Yeah. Well, yeah, I mean, it all goes right to the bottom line.
Everybody's situation's different. And
so, Arnold, here's what I think about that deal. I think that it matters more it's really about cash flow. That sounds like a very fair note that they're offering you. Pretty much 0% interest in the first year, and then 5 after that, in the first 3 years, and then 5 after that. But Arnold, it really goes back to, are you going to have to write that check out of your own pocket every month, or can you rent that property out for more than $1,000 a month so you can make cash flow? Because a note's only as good. It's not about the note. It's about the cash flow you're getting behind it, right? So I would look at it from that perspective. I would look at that deal from a cash flow perspective versus the paying the principal off and things like that. Rent for $1,300. Very good. Thank you, Arnold. So make $300 a month. You got to factor in your real estate tax. I mean, we don't need to go here, but just final advice: use the bigger pockets calculator, and use the BRRRR calculator, because the BRRRR calculator will let you put in one mortgage for a period of time and then a second mortgage for a second period of time after refi. So use the bigger pockets BRRRR calculator. If you have a Bigger Pockets Pro membership, you can use it as many times as you want. If you've never used it before, you can use it, I think, for free for the first 5 times. But either way, it's totally worth it. $300 a month, as long as that covers an allocation for maintenance, real estate taxes, and insurance. I like it. I like the deal overall. So I would say go for it. And Dave says that too, right, Dave?
Yeah, I mean, and you also got to know who you're doing business with. You also got to know, right? You're just throwing the terms of a note at us. Well, there's a lot more to it than that, right? One is your paperwork and your documents. The other one is the actual property and the collateral behind it. So
no, it is. You're right. There's a lot more. There's a lot to this stuff. But I'd say, Arnold, at first glance, I would give it a shot. A bunch of shout outs here real quick to Lucas, both of our friends. Lucas up here in Pennsylvania. How are you? I got Fred from Nuevo Valera, Texas. I got David from Berlin, Europe, man. Welcome overseas, David. David. We're reaching across the Atlantic here, man. Okay, questions. I don't know if you want to tackle it or not, David. I'll throw it out there. How is multifamily affected? Muhammad wants to know that. What do you think?
How multifamily is affected by COVID?
Yeah, well, I mean, I can touch on it too, because I own some multifamily. I know you do as well. So what do you, I mean, or even just your crystal, if you could break your crystal ball out and let us know how you think multifamily is going to be affected.
Yeah, most multifamily has a vacancy factor, right? It might be 5-10%, whatever it is.
Yep.
But depending on how long the shutdown lasts in your area where your multifamily is located, will you see, anywhere from 15, 20, 30% in non for a month or two, or longer? I don't know. And it may depend on the makeup of the clientele in your multifamily. Are they, Section 8? Are they middle class? Are they upper class? Do they have different types of jobs, right? So all that's going to vary. Student housing, like there's a whole variety of types of client base. So I don't think it's unfair to say a general blanket statement there, but I think you're going to see some vacancy factor, or not vacancy factor, non-payment factor. The only difference I see between real estate, because I have properties too, is that when I miss I was a property manager for a long period of time and I've been doing this over 30 years. What I've noticed is when a tenant is behind 60 days or more, they never catch up.
Nope.
And that money's out the window. Whereas with loans, a note and mortgage, for example, if they miss, 90 days forbearance or whatever that is, usually that's going to be kept into the deal, though. It's going to be tacked onto the back or whatever. So it's a much different animal that I noticed, because you talked about diversification. I do real estate just like everybody else, but I also do notes. And the one thing I like about the note piece is I don't miss out on those payments once they get beyond a certain period of time. Does that make sense?
It makes total sense. You're right. I mean, you're not having to walk away from debt as you would in residential tenancy. And I think that folks that own the home through a mortgage are going to be more attached and willing to stay in that home and do a workout versus, I mean, if I approach a tenant that owes more than a month or two's worth of rent, they'll likely just move out. And rents and try control alt delete, reboot, move somewhere else. And that, whereas a homeowner would much rather, even if they could be 6 months behind, they'd rather work it out with you over losing their home. So I think that's a very good point.
I was going to say, you have some unintended consequences from government intervention, right? So you have stimulus. Are they going to use it for the rent or not? Or are they going to go buy weed or whatever? And the other possible is, are they going to, you have moratoriums on eviction.
Yep.
Right.
Yeah, absolutely.
What impact are they going to have? And they're going to vary probably too, right? So you're going to have some states that have it longer or shorter than others. Yeah.
I got 2 great questions here. I got one from Ivan. Do you see, and I know you already mentioned this a percentage briefly, but I want to just touch on it again. Do you see an uptick in foreclosures in the note space? This is Ivan coming in off of YouTube. Welcome, Ivan. What do you think, Dave?
I believe we will see it.
You had said earlier,
It didn't happen this week yet, but we will see it.
Yeah. Right. And the reason you had said earlier is because obviously just like evictions, courts are closed. And so courts are closed for you to advance most of your foreclosures. But what percentage that you would say that the prediction was a non-payment was somewhere in the 20 to 30% range, did you say?
It could be if in reperforming loan world, in just reperforming. But yet his questions around foreclosures. Yeah. We're trying to keep our staff working because we anticipate we'll be working overtime in the third and fourth quarter because you're going to have all this pent up foreclosure work that can't take place right now or slows down. And then now all of a sudden you will be able to.
The courthouses are going to have a line around the block for all the pent up evictions and foreclosure actions that need to take place to clean up this the backlog.
Good opportunity coming up to fix and flip and things like that.
Sure. Arthur, how did the effects, and this, you touched on this briefly, but I think that Arthur's taught, you had mentioned the stimulus. Arthur, I think, is asking more about the Fed. So I'm going to ask it from that perspective. Arthur wants to know, how does the actions of the Fed impact note investing, especially non-performing notes? And I know you've got some non-performing notes for other companies and stuff like that, Dave. So the Fed's been, and I'll frame it. The Fed has been pumping a ton of money into just printing money. They've just printing money, dropping rates. How do you think those actions of printing money and dropping rates have affected the non-performing note world and also performing notes too? What do you think?
It's yet to be seen. It's trying to predict, is there going to be inflation, deflation, stagflation? It's hard to tell, right? So it's really a tough one. You're pumping a lot of money into the economy. Going to go up? I think they will. Yeah, I think there's going to be. Will your dollars buy less? I believe they will. Yeah.
Has to. It's just there's more dollars in the ocean now, and so now it just becomes a supply thing. Do you think that's going to cause rate increase?
Well, it could. I mean, I know lending has gotten tightened up, and a lot of the commercial financing, especially, we're seeing, especially in the aggregation of hard money deals, they tend to aggregate. And there's less and less places to originate a hard money deal and sell them off.
Yeah.
So business is pretty much dried up, and the non-QM space as well. So we're seeing a lot of mortgages that can't be sold to the government agencies. There's really not much of a secondary market for that. We're seeing a lot of margin calls. So we're seeing bond collapses, things like that. And that's a result of the environment we're in. Yeah. So liquidity crunch, basically. It's a liquidity issue. And until we get some kind of health fix to the health situation, it's going to be hard to fix the economy till we see some light at the end of the tunnel on the health side. But we're starting to, so that's the good news.
It's starting to, yeah. They say we've got past the top of the peak, right? And is that what you're referring to? Yeah. Okay. Mira, is this a recommended time for a new investor to get started with this product? Or should I wait 6 months for better prices? Now, this is great. Dave, you got a brand new investor wants to get into the note space. Obviously, Mira needs to pick up a copy of this, which is Dave's book, getting it from biggerpockets.com/store. But Mira, what do you think? What advice would you give Mira here, Dave?
No, I think it's a good time anytime. It's just like real estate. When's the best time to get into real estate? I don't know that it matters. I bought my first multi-unit in 1989. And guess what? I paid market value. And guess what? It doesn't matter today at all. it's went up 5 times in value, and who cares? So, there's no right or wrong to that. You can definitely get into the note space or invest in what you know or like. And that's what I recommend to people. My heating and air conditioning guy finances heaters. So my dentist finances dental work. That's the note business. You can finance hard money. So invest in what you know, invest in what you like. And there's plenty of ways to do it. Lending Club is the note business, right? And that's a unsecured note. And you can own a piece of it with crowdfunding.
Why? I'll get a little personal here, Dave. Why do you like note investing? Because that's a great point about invest in something you like and that you understand. But I get that the investment that you make should not just be about dollars and cents. It's got to be something you like, you're passionate about, that you want to learn more about. So why note investing for you? Well, why do you like it?
I like it because anything I can invest in at a discount with a high yield with collateral, and it was real estate backed, and it was one family residential. So I think people have a vested interest. That was a space that turned me on because I was coming from the real estate world.
Mm-hmm.
So I started out with seller financed and hard money lending and things like that in the beginning, and then worked my way into the institutional note space. But that's what I like about it. I just enjoy it. And I feel that if you can master the finance parts of the business, you can become more efficient at your everyday real estate investing. Mm-hmm. So nobody says you have to own 1 million units or thousands of units. I think you can be, because it's a finance driven business. And if you find ways to, I don't want to say manipulate or work the finance side of the world, there's just as much opportunity there as there is in the actual real estate world, the sticks and bricks part.
I got 2 great follow-up questions. I'm going to jump all the way ahead to Marie, because Marie's got a basic question, bottom line question. I think that we got to take it. We got to drop to, we got to go one-on-one level real quick, because I want to make sure everybody gets taken care of here. Marie wants to know, it's my first time with you guys. What is note investing? There we go, Dave. And I think we probably should have started with that. And I know a lot of that's covered here, but what is note investing? Let's go there.
What's the note? It's a musical symbol, right?
Woo. I'm investing in C#.
A note is a promise to pay. And usually when I'm referring to notes, I'm referring to a note mortgage that's tied to a piece of residential real estate, like your house, your primary residence, or a rental property. But there's commercial notes, there's unsecured notes. Unsecured note would be credit card debt. You have student loan debt, you have auto debt, you have medical debt. And, we're a debt-ridden country, right? There's trillions of dollars of debt. So I just happen to like secured debt that's secured by a piece of real estate. And that's for me. Now, there's people that invest in commercial notes, right? So there's also
CMBS, commercial mortgage-backed securities. Yeah. I mean, okay. So jumping back to Melissa, because this is a good follow-up to that. So Marie, I hope that answers your question. And again, Dave's got a great book on note investing we should check out. But jumping ahead to back to Melissa, and this is kind of a follow-up too. So let's say Marie decides note investing is for her, or Melissa decides note investing is for her. How much does it take to start off in note investing? What states are the best? Let's start with how much money does it take to get started? And then Melissa wants to know what states are best. I mean, you can or can't go there if you want, Dave. I don't know if you want to go there or not, but if you want to name some states you've had a lot of success, then you're more than welcome to jump into that too.
Well, it depends on what asset class you're going into, right? So if you're going into a prosper.com lending club, you can invest $20, right? So let's not money be the issue here. If you want to invest in non-performing notes, they're cheaper. If you want to invest in junior liens, they're even cheaper. If you want first mortgages, they're more expensive. If you want to invest in a commercial note, they're real expensive. So it runs the gamut. So from $20 to $20 million, it's where do you?
Well, what's a typical if somebody? I mean, obviously, putting $20 in lending club is a good way to start, but that's not going to move the needle too much, right? If somebody wanted to use some of the methods, I'm going to touch a different book this time. This is my book, Raising Private Capital, and you can use the methods and technology that's here in Raising Private Capital, which is also a Bigger Pockets book, which you guys can get at biggerpockets.com/store. You can buy mine and Dave's book together. We would both, the lots of great information there, but you can raise some of the capital that you need to get involved in note investing. But beyond let's say somebody wants to invest with them for, let's say, $100,000. On top of that, Dave, how much of their own capital do you really believe somebody needs? I mean, are we talking like to get a reasonable amount of note portfolio? Are we talking 5,000, 10,000, assuming they're going to raise some capital to stand behind them? Did you believe somebody needs to have a 6-figure pool to invest with, or can they get it done with 5, 10, 15,000 if they've got some folks that like and trust them that they find through this book to work with them?
Now that you mentioned your book, Matt, that's how we built PPR
because of my book.
Yes. Well, we did. But yes, we were raising private equity, not much of our own money at all. And we built the entire company with other people's money. So you don't really need your own capital to do the business, right? Let's get that out there first. The other
Take that home, Melissa. You don't need a ton of your own money. That's what Dave's really saying.
So, but my point is, notes cost money though, and performing loans. Just to give you an idea of some of the performing loans we sell, junior liens reperforming sell from anywhere normally 10 grand to 30 grand, and you'll see first mortgages sell from 20 grand to 60, 70 grand that we typically sell. Now they get much bigger than that if you can find a place that where they're marketed, So don't think that they don't. Non-performing tend to be cheaper. To Matt's point, you're buying it for 50, 60, 70 cents on the dollar. Junior liens are less than that. Might be 25, 30 cents on the dollar.
And Dave, this is a great segue too. High Tech Cap wanted to know where do you buy notes? And I know that your company sells notes as well. So if you can just mention, how do people find out about how to hear about those notes your company has, and maybe you can recommend one or two other places that people can go around and shop for notes too.
Sure. I mean, there's a lot of platforms online, like the auction.com type places, PaperStack. You can go to pprnoteco.com and buy notes.
pprnoteco.com. Okay.
We sell notes. We push them out every week in our email newsletter. There's also trade desks that sell them, like the Colonial Fundings of the world and things like that. There's all kinds of online platforms. We have a distressed mortgages group. People sell notes through there. On LinkedIn. So there's all kinds of, it's just like anything else that if you decide to go down that route, it's get more educated in the space, network with people doing it, maybe find somebody to partner with on a deal or shadow their deal and learn the business. That's really
okay. Okay, great. I love it. Some great resources there, High Tech. Does the value of a note change with the rise and fall in the interest rates the same way that bond values do? Great question.
It can. It's really more with the real estate values that it changes. So it's notes are direct correlation to real estate values, right? So if real estate values are up, the cost of notes are up, the margins are thinner. If real estate values drop, the notes get cheaper, and that's supply and demand. So in a downturn, if values of real estate fall, the notes get cheaper and they're more abundant.
Okay. So you're saying it really has to do with real estate prices versus
interest rates don't have an impact. They do. They don't really matter as much on the actual note mortgage because you're buying it at a discount and you're going to modify it, right?
Yeah.
Or vacant and you're going to get the property. So the interest on the original note's not as relevant. Where it impacts you more is on your cost of capital.
Would it be fair to say, Dave, that if rising and falling interest rates really affect what new loans get originated at versus what performing or non-performing loans are going to value at? So it's really about that. It does change the note world, but it changes more on the origination side when notes get pushed into the market versus notes that you're buying. Is that fair to say?
It is. And think about it. If your rate is 3% or 9%, if I modify it, what does it matter what the original one was?
Right. There you go.
I'm going to rewrite that anyway. Affordability.
Okay. Ramon, you had asked about what the typical discount we can get for non-performing notes. Dave, you had said that, it could be
the market. That's what's bad about giving you a number today, right? So, I've seen them real cheap and I've seen them real expensive. I've seen first mortgages trade at 80 cents. I've seen first mortgages trade at 12 cents.
Yeah. But that could be in the worst neighborhood of Detroit.
So
that could be the worst neighborhood of Detroit with war zone. Yeah.
Higher than the property's worth.
So, yeah. There you go. Yeah. Okay. So a follow-up Ramon has said is, how do you hedge your risk? I mean, are there ways to hedge on buying non-performing notes?
Yes. So if you're buying first mortgages, you could buy stuff that's fully covered with equity. Buying junior liens, same thing. You could buy equity junior liens versus non-equity or partial equity, right? You could also buy a junior lien where they're current on the first as opposed to non-current. You can also buy occupied versus vacant.
When you say covered with equity, you mean property's worth $200,000 based on some market research you've done, Zillow, Trulia, or more in-depth market researches, and you're buying the first position lien for $70,000. So you've got that equity.
Here's what the difference is. So if it's $100,000 mortgage and I can buy it for 70 cents on the dollar, but what's the property worth? Is the property worth 90 or is the property worth $1.30?
Right. If it's worth 90, I'm really not covered by equity. I'm really underwater. Even though I'm getting it for cheap, I'm never going to get the $100,000 par value for the property. So you got to look at the par value of what the mortgage, what the loan really is versus the property value. That's how you really calculate equity. It's not about the discount you're getting.
Is it occupied or vacant? And then what's we have a foreclosure matrix for every state. What's the timeline and length and cost of foreclosure, for example, right? Cool. So we have a whole matrix for that. Yeah.
Cool. Few more questions here. You're welcome, Arnold. Arnold gave us a nice thank you for our help earlier. Adrian from New York City. Hello. Fred,
Hello.
another out-of-stater coming in from Mexico. Welcome. Now, Adrian, how will this affect different markets? Big market versus little market. So how does, now we're talking Corona crazy. How does that affect different markets in the U.S.? I mean, it's maybe a little outside of note investing in general, Dave, but what do you think about the future for some of our big markets like Atlanta, New York, large populated markets versus secondary, tertiary markets?
Well, I think a lot's going to depend on the types of jobs in those areas, right? If you were a big travel industry area, you might be impacted more by COVID, right? So in other words, if you're Orlando or Las Vegas, what's it going to be like there if they can't do events the same way? Or, I don't know yet. I'm not that smart, to be honest with you.
I would agree with you that it really depends on the economy in the area, because the economy and jobs are what really drives the real estate market behind the scenes. I agree that markets like Orlando and Vegas, if physical conferences become less and less frequent, markets like that may see a downturn because people can't, those markets are really driven on people flying there to go have fun or to go network and do business, right? So if that becomes less frequent, then those markets are going to see less action, less money coming in and getting spent there, which is going to drop their jobs and drop their home values. Perhaps. Again, mine and Dave's crystal ball are both broken, but this is all speculative what we think. So one question from Felipe. When you are the note holder, can you change the terms of the loan? I.e., if the homeowner needs forbearance, can you tack on the missed payments in the back of the loan or split the payments over months? In general, what Felipe is talking about is a loan mod, I believe, Dave. So how does that typically work?
Well, there are some regulatory requirements, like you can't just charge any interest rate you want, or you can't do, but there are, within reason, yes, you can tack on missed payments, arrears, late fees, legal, you're allowed to do that. Yes. And you can roll that into the new modification, or you can forgive some stuff, or you can extend the term. There's a lot of things you can do. Yes.
I think that's great. There's a lot of rules, but there's rules, but you have a lot of options. So
there's limits, right? I can't charge 18% interest, right?
Right.
And things like that.
High Tech Cap wanted to know, I mean, if you're owning a lien on a property, and he wants to know, can you eventually foreclose on the property and then sell it?
You were breaking up there a little bit, Matt.
Sorry. So High Tech Cap wanted to know, can you foreclose on a property and then sell it? If you own the lien on it, couldn't you just foreclose on the property and then take ownership? I mean, there is a path to ownership if you own the lien, correct?
Yes.
Yeah, good. That's one of the covenants you get. Different states take different times.
Still foreclose and sell the property.
Do you how much? This is a Matt Faircloth question, not a High Tech Cap question. But when you're investing in a note, how heavily do you consider those states' foreclosure laws? Right. I know New Jersey is a much harder state. I think New Jersey is a much harder state to foreclose on than Pennsylvania is, and they're right across the water from each other. How high of a factor do you consider the difficulty to foreclosure? Very high.
Very high. In fact, we have a whole foreclosure matrix by state. So for example, Texas and Georgia, you can foreclose like 90 days, real quick, 60, 90 days, whereas New Jersey could be 3 years. So there's
will you do business in states like that, like Jersey, where it takes a really long time to foreclose?
Product in all 50 states. Now we're heavier in about 25 or 30 states, and we get different pricing. They trade at different prices. So they factor that in, Matt. So if you're in a long-term foreclosure timeline state, you might not get as much for that asset.
Yeah, I get it, because you're right. It's probably baked in. Everybody has the same data that you do. It's a level playing field. So that difficulty to foreclose is baked into the pricing. So, okay, listen, guys, this has been a great conversation. Dave, if there's a lot more questions coming in that we didn't have a chance to get to, so you guys keep the questions coming. If you guys are watching the recording of this, Dave, if you can, would you be open to checking the Bigger Pockets Facebook page in about an hour or so, and maybe even the YouTube page, and just typing in a few answers to some of these great questions that are here. So keep the questions coming, guys. Dave is going to take a peek to the Facebook page in about an hour and a half, to just sometime today, and he'll pop back some answers to your questions. But also, more importantly, Dave, if people want to hear more about your company or you personally or whatever, how do they get a hold of you?
pprnoteco.com.
pprnoteco.com. You guys can hear more about Dave's company. And obviously, one more time, I know I've mentioned it a lot, but I'll mention it one more time because it's a great book. And this is Dave's book, Real Estate and Note Investing. Real Estate Note Investing. You can get it at biggerpockets.com/store. You guys can get an audio version of Dave's book. Now, Dave, did you read your book? Are you the reader of your book?
No, but
I'm not. I wish I'd read mine. I'm not the reader of this either. I should be.
All right, and hey, Matt's book's great too on raising capital. Don't forget his book.
Thank you. We pick them both up. It's $10. At the end of the day, you guys can get the digital copy of Dave's book, the digital copy of my book, or the audio of both for $20. How else could you up your real estate education with this? With this book, you learn how to raise money out of your own network because you already know people with the people with the money. This book tells you how to find the money out of your own network and raise millions out of your own personal network. And this book tells you how to put it to work in private notes. So you can, through reading these two books, which I bet you today's Monday, you can knock them both out by Friday and then be raising money for notes by next week. Why not? You guys are sitting at home just surfing Netflix. You might as well make some money and learn how to do it through mine and Dave's books. Dave, thank you I know you're busy. Thank you so much for taking time out of your busy day. And I really, really appreciate your time. And I appreciate the audience. You guys had phenomenal questions. Thank you so much for tossing those out. And Dave will check your questions on the Bigger Pockets Facebook page and YouTube and type in some thoughtful answers there too. Dave, I appreciate you. Guys, next Monday at noon Eastern Standard Time, the Brian Burke is going to be here to talk about his new book that he just released for biggerpockets.com, which is really about passive investing and how to really up your net worth through passive investments, how to create them and how to invest in them. Dave, I know you know Brian very well. Yeah, I hope you're able to join us too, Dave, to watch and pump in some good questions. I'm really excited for what Brian Burke has to say, and I'm looking forward to checking out his book as well. So everybody, be here next week, noon Eastern Standard Time on Monday. Look forward to see you here. Thanks, guys. Thanks again, Dave.
Thanks, Matt. See you guys.